Good evening, everybody. Hope you had a great day today, as it being a Monday. I'm Sharon, and welcome to this webinar series, Show Me the Money, brought to you by Bursa Station. This is the number 5 of 7 webinar series, and tonight's session, the topic is Right on the Market Trend with Futures Trading. It will give you an overview of what futures trading is all about. It will also bring your understanding to the next level by learning key concepts, benefits of futures trading, and more importantly, the tools to use when analyzing the futures market. Are we ready to start? Please tap chat. Please type ready on the chat so that we will know that you are all there and we can start soon. So before I introduce the speaker tonight, allow me to share with you about our sponsor, Bursa Station. Okay, for those of you who does not know what Bursa Station is all about, it's ShareInvestor's market data analytics platform for investor. It is all about the companies listed on Bursa Malaysia. With Bursa Station, you can use the tools to help you pick out the right stocks to invest in. Whether you prefer technical analysis or fundamental analysis, Bursa Station will be able to cater to all your data analysis needs. It has data for Malaysian equities and derivatives market, financial results, intraday data, intraday market ticker, market scanner, power frame, dynamic charts, Bursa news, and business news. And do you know, we have a 14 days free trial available. Just visit bursastation.com and search for trial sign up. I repeat, we have 14 days of free trial. Okay, if you stay to the end, we will be giving away special prizes and a special offer if you should take up the subscription for Bursa Station tonight. Okay, also, we have ShareInvestor Malaysia produces Invest Weekly, a publication aimed at investors. It's called Invest and it presents to the top performing stocks of Bursa Malaysia every week. Invest is free and all you need to do is scan on the QR code on screen now and register with your name, email address, and telephone number. That's all. Invest will be in your inbox on Friday before lunchtime. So since everything in life is free, do remember to register for it. Okay, let me see. How are we? A lot of more attendees. Yes, we have a lot. We shall start soon. Okay. Let me introduce our speaker tonight, Mr. Tran Cheong. He is from Phillip Futures Sdn Bhd and holds a bachelor degree in commerce from University of Sydney. He is also a holder of CMSR issued by our Securities Commission. Tran offers regular personal coaching sessions on futures, trading, and platform usage to new investor. Without further ado, over to you, Tran.
Hello, good evening, everyone. How are you guys doing today? I hope you already had your dinner. Okay. First of all, before I start, I will do a sound check. Can everyone hear me clearly? If you can hear me clearly, just type yes in the chat box. Yeah. Hello. Can everyone hear me clearly? Just type yes in the chat box will do. Okay, good. Okay, before I start, I would like to thank ShareInvestor for organizing this wonderful webinar. Okay, and also Phillip Futures for giving me a chance to speak here. And okay, so today's topic will be right on the market trend with futures trading. Okay, so I will introduce to you some of the basics mechanism on futures trading. So before I start, just a minute. Okay, there goes the slide. Today's topic will be right on the market trend with futures trading. Sorry, a bit of technical issue there. Okay, so before I start, I should do a slight disclaimer here. Okay, this webinar today will be mainly for educational purpose only. Okay, so wherever presented here Phillip Futures will not be liable for any losses incurred. Okay, it does not constitute a buy or sell recommendation. Okay, all investments are subjected to investment risk. So okay, let's start our webinar then. Okay, before I start, I would like to do a bit of introduction on Phillip Futures. So Phillip Futures is actually a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. Okay, we are incorporated on 7 October 1995. So as of today, we have 7 offices around Malaysia. Okay, our HQ is located in Kuala Lumpur. Then we have 6 other branches. Okay, mainly in Penang, Kota Damansara, Melaka, Johor, Kuching, and the newly opened Cebu branch. Okay, so next, we are actually also a holder of the license for trading participant of Bursa Malaysia Derivatives Berhad, and also the clearing license, which is the clearing participant of Bursa Malaysia Derivatives Berhad. Okay, these 2 licenses will allow us to accept orders and also to clear off future orders. And we are regulated by Securities Commission. Hence, we are the holder of the Capital Market Service License. Okay, this is one of our achievements that we achieved that was awarded to us last month. Okay, at the Bursa Excellence Awards 2019. So for those of you who doesn't know what is Bursa Excellence Awards, it's actually an award to acknowledge the contribution of the top brokers, equities brokers and derivatives brokers in Malaysia. So in this award, we won 3 prizes: the best institutional derivatives trading participant, okay, runner-up in overall derivatives trading participant, and also first runner-up in retail derivatives trading participant. So I will take this opportunity to thank our clients for their continuous support. Okay, at Phillip Futures, we provide futures trading from most of the major exchanges in the world. So as you can see on the screen here, in Malaysia, the only futures exchange is Bursa Malaysia. So you can see other futures exchange as well. Okay, so why should you choose Phillip Futures? These are some of the services that we provide. First of all, we provide advisory service, meaning to say if you are looking for trading recommendations, so you can call into our dealing desk to ask for a recommendation whether it's suitable or not suitable. Okay, then we provide a wide range of products. Then we also provide the latest market news. So this market news will be sent in the form of email or is uploaded to our website. And lastly, we have 24 hours broking and execution support. So this is quite important for those of you that trade some of the clients that trade the night market. So you can just call in the dealing desk even after normal working hours. So in Phillip Futures, we actually we strive a lot on education. So we provide free one-to-one coaching session, free seminars and webinars, and also free account opening. Okay, so how can you contact us? You can contact us through a few channels. We have Facebook, LinkedIn, and YouTube. All you have to do is just search Phillip Futures Sdn Bhd. Okay, alternatively, we also are available on Telegram. So you have to search for Phillip Futures. So at these channels, we usually share the latest market news, some educational videos, education news, and also the latest market updates. Okay, this is our contact details. So if you wish to open an account or you wish to learn more about futures trading, you can just contact any of our branches based on the as provided on the screen here. Okay, so our website is www.phillipfutures.com.my, and our Facebook is Phillip Futures Sdn Bhd. Okay, now after a brief introduction of my company, so I'll walk you through today's outline. Okay, so what we'll be covering today will be mainly on the basics of futures trading. So I'll walk you through what are futures, okay? Who are the market participants in futures market, and also what are the benefits of futures trading, okay? How does a trade work, mainly on the mechanism of futures trading, and some basic technical analysis and fundamental analysis. Okay, what are futures? Okay, let me give you a operational definition of futures contract. So a futures contract is an obligation to buy or sell specific quantity of a certain commodity or asset on a future date at an agreed upon price. Okay, this definition seems quite long, but actually there's a few main elements in futures contract. So all you have to know is what is the quantity, what's the commodity, what's the date, what's the price. So as in quantity, how many lots are you trading? That's the quantity aspect of it. So commodity will be the underlying asset. Okay. For example, Bursa Malaysia FCPO. So what the underlying asset is crude palm oil. FCPO stands for futures on crude palm oil. Okay. Then you have the date element. Date element mainly refer to the expiry date. So for futures contract, as you can see on the operator definition, it says that you are obligated to buy or sell on a future date. So the date here referring to the expiry date. So for example, August contract. So when is the last expiry day for August contract? Could be the last trading day usually. Then price will be as everyone familiar with, is the current trading price of the contract. Okay. So what this futures contract allows is allow everyone to participate in the movement of the underlying asset. So as a normal retail investor, okay, when you trade futures contract, you actually are participating in the price movement. Okay, if you buy in futures trading term, we quite long. Okay, so when you long a contract, you actually expecting the price to go up. When you short a contract, short means you sell the contract. In futures trading, you can go both ways. So when you sell a contract, you're expecting the price to go down. So that's how futures contract work. Next, we'll go to what are the types of futures contract that's available in the futures market. Okay, we have agricultural futures, energy futures, interest rate futures, metal futures, and equity futures. Okay, so one of the example of agricultural futures will be crude palm oil. Okay, in Bursa Malaysia, we offer futures on crude palm oil, FCPO in short. Then for equity future, we have FKLI. FKLI means futures on KLCI index. This is then another metals futures will be something like FGLD. FGLD means futures on gold. These are some of the mainly traded futures product on Bursa Malaysia. And as for interest rate futures in Bursa Malaysia, also we have futures on Malaysian government security bonds. If you guys are interested to trade, okay, you can look up more online. But I'll go through some of the details of the contract of the futures later. Okay, next, what are the use of futures contract? So futures contract are mainly used for three main purposes: hedging, speculating, and arbitraging. Okay, I'll cover more in depth in the next section where I'll talk a bit about the market participants. So who trade futures? So as a trader, you want to know who are your counterparties. So for example, with futures trading, you want to know who am I transacting in the futures exchange. So I'll go through with you who is the market participant. Okay, the first group of traders will be hedgers. So hedgers have a position in the underlying commodity. Okay, they are mainly business owners. Okay, in this case, I can see on the picture is crude palm oil. So hedgers for crude palm oil are mainly producers or consumers of crude palm oil, meaning to say they use crude palm oil to produce something, so they are the consumer. Okay, why do they need to trade futures contract? So they use to trade futures contract actually is to reduce or limit the risk associated with the adverse price change. Okay, so one example is let's say I'm a palm oil producer. Okay, my goal is to sell as the highest price as possible, right? Okay, what if currently CPO market is on a downtrend. Okay, it definitely will cause me losses as I'm not going to sell as high as I wanted. So what can a palm oil producer do? So he or she will go into the market and short futures FCPO. So in this case, he expecting the palm oil producer expecting the price to go down. Okay, this is called hedging. This is an example of hedging. So the end result is, as the market go down, the hedger will get profit from shorting the FCPO because price is going down. You are earning profit as you sell. Okay. On the other hand, at its main business, okay, he's not able to sell that high. Okay. So in that case, wherever profit from futures trading is used to compensate the lower price in his main business. So in this case, the hedger is able to lock in a price. In a way, is lock in the price, meaning to compensate wherever losses incur in the main business. So this is one example of hedgers. Next, we have speculators. So for speculators, it's mainly individual traders, portfolio managers, proprietary trading firms, and hedge funds. So what speculators do they mainly as the name sound and the name suggests, speculating. So they mainly speculate the price movement of the underlying asset. So for example, they expect FKLI means the futures on the KLCI index to go up. So what they can do, they long a futures contract. Long means buy a futures contract. So as the price go up, okay, they are able to generate a profit from their trading. Next, we have another group, which is the market makers. So what market makers do, they actually provide liquidity to the market. So what they do is that they actually queue orders on the bid and ask price, so that there are traders who wish to trade the underlying, wish to trade the futures. They are able to get in orders. Their orders can get executed. So how they make money through the market is mainly profit from capturing the bid-ask spread through a large number of transactions. Okay, the last group of traders will be arbitrager. So arbitrager is mainly professional traders that have a wide knowledge on the market. So what they do is they trade simultaneously on two different markets. Okay, one example of arbitraging will be through gold futures. So gold futures actually is listed in quite a few exchanges. One of the exchange will be our own Bursa Malaysia, known as FGLD, futures on gold, and the other futures will be on the COMEX market, the US market. So if this investor found out that the price in these two markets differs after considering exchange rate, of course, because one is in US market, one is in Malaysian market. So after considering the exchange rate, so he found there's a price difference, he will long the contract, the side where it is lower in price, and short the contract that is higher in price. So in this way, the higher price will deviate towards the mean, and the lower one will deviate upward towards the mean. So in this case, he is able to generate a profit through simultaneous trade. That is called arbitraging. So the main key here is simultaneous trade. When you have a wide knowledge of the market, you are able to do such thing. Okay, so I'll cover all the market participants. So next we'll move on to what are the benefits of futures trading. Okay, the first benefits of futures trading is mainly on leverage. So I'll provide an example here where on the left FCPO is a leverage product. Okay, then on the right hand side, Maybank stock without leverage. Okay, purely one-to-one, no leverage. FCPO is a leverage product, futures on crude palm oil. Then we start off with a starting capital of 45,000 on both counter, fully invested. Okay, now I'll walk you through with a 1% increase in price. Okay, as you can see on the fourth row here, 1% increase in price, how much percentage of profit and loss you can generate. Okay, let's assume the current price is 2,700. for FCPO and 8 ringgit for Maybank. Okay, then we fully invested the 45,000 into these two assets. So from FCPO we have 10 lots. 45,000 divided by 4,500 is 10 lots. We're able to, by fully investing, we're able to get 10 lots. As for Maybank, we are able to get 56 lots. This is rounded down actually. There's odd lots of 25 there. So I'll round it down to 56 lots. This is a slight round down. Won't affect the results significantly. Okay, so by 1% increase of price. So 1% increase of price means the current price is 2,700 to 2,727 for FCPO. And for Maybank stock will be 8 ringgit to 8 ringgit and 8 cents. Okay, that's 1% increase in price. So how much profit can we generate from these two investments? First, from CPO, you can see the profit is 6,750. Then for Maybank is 448 ringgit. Okay, from there you can already see how much a difference is there. So the ending capital will be 51,750, and for FCPO, and for Maybank we have 45,448. So what is the percentage of profit and losses? As for FCPO, there's 15%, and Maybank is 1%. So with 1% change in price, FCPO will give you 15% return, whereas 1% change in price of Maybank will give you 1% change in return. Sorry, 1% profit and loss. So in this case, we can see how leverage works in FCPO. By comparing the profit and loss also, you can clearly see that FCPO is actually 15 times leverage. So for those of you who are interested to invest in a leverage product to maximize your return, trading futures would be a good opportunity. Okay, next. Before you invest in any investment or whatever assets, first of all, you must ensure that the products are regulated. So as for futures trading in Malaysia, is traded on the Bursa Malaysia Derivatives Bhd, which is one of the subsidiaries of Bursa Malaysia. Okay, it's governed by Securities Commission. Then the law that this is the law that oversees the whole trading market. The futures market will be Capital Market and Services Act 2007. Then all this are oversees by Ministry of Finance Malaysia. Okay, so it's make sure you are trading with a registered broker when you are trading futures in Malaysia. Phillip Futures is one of the registered broker, just for your information. Okay, next. Another benefits of futures trading will be portfolio diversification. As you can see on the screen here, we have a wide range of futures to trade. You have index futures, energy futures, agricultural futures, interest rate futures, and metal futures. So this by trading a different type of futures, it will allows you a portfolio diversification. Okay, because these kind of futures have a lower correlation between each other, so it will give you a portfolio diversification purpose. Okay, next is liquidity. One of the benefit of futures trading is that most of the futures in the market has a huge liquidity. One of the main reasons because futures trading are traded on through electronic access, so it will contribute to higher volume, which contribute to better liquidity. Okay, let me show you how's the liquidity for two of the main futures that's traded in Bursa. Okay, the first one will be CPO. Average contract traded daily, it will be 20,000. Okay, it's quite high actually, so you have no risk on entering and exiting your position. As for FKI, is half that amount, but it's still quite high, which is 10,000 contracts traded daily. Okay, so similarly, if you are planning to trade FKLI, no worries on exiting and entering a position. Okay, lastly, will be transparency. So when you are trading, you want to make sure that whatever price you are seeing are known to everyone. So futures trading in Malaysia through Bursa Malaysia is actually a futures trading exchange where the marketplace is centralized. Okay, so hence the trading will be open, fair, and anonymous. Wherever you see on your platform is the price that everyone is seeing from different brokers, or is seeing the same price, traders from different brokers. So, and it's also distributed real time. So in this case, transparency is at its max here. Okay, after I've covered all the benefits of futures trading, I would like to talk a bit about the basic mechanism of futures trading. How does a trade work? The first thing that you need to know about futures trading is you need to know contract size. Basically, by trading one contract, what are the position are you holding actually? So for FCPO, okay, before this, I would like to clarify that for the purpose of this presentation, all the futures will be mainly focused on FCPO and FKI, which is also a Bursa Malaysia product. Okay, so in this case, FCPO, the contract size is 25 tan. As for FKLI, is 50 ringgit per contract. So by trading one lot, okay, in futures contract are usually trading 1 lot, 2 lot, and 3 lot whole numbers. You can trade a fraction of the contract, which is like 0.5, 0.1. No, you can't do that. You must trade in whole numbers, 1 lot, 2 lot, and 3 lot. So by trading 1 lot in FCPO, you're actually holding a 25 ton. You're trading 25 tons of crude palm oil. Okay. The next thing that you have to know is margin. Margin is also known as performance bond. So this is one of in other words, is the amount of money deposited by both buyer and sellers to ensure the performance of the contract terms. Okay. So for FCPO, the margin is 4,500, and FKI is 4,200. What it means here is, what it means here is, if you want to enter one contract of FCPO, you need to have a minimum balance in your account of 4,500. So when you enter in a position in FCPO, this 4,500 actually is not deducted. It just get locked there. Just get locked. So whatever profit and losses will be deducted from this 4,500. Next, we'll go to the contract value. So by trading one contract, how large of a value of this 25 tons or 50 ringgit of FCPO and FKI means to you. So how to get the contract value? You basically need to times the contract size and times the contract size with the current price. You get the contract value. Okay. So assuming CPO currently is trading at 27,050. So by 25 tons means each ton is 2,750. So you times it by 25 tons, you get a contract value of 68,750. So by actually trading one contract of FCPO, actually holding a position of 68,750. And one thing good about futures trading is by using merely a margin of just 4,500 on FCPO, you are controlling a position of 68,750. Okay, about 15 times leverage there. As for FKLI is 50 ringgit times the current index. Okay, not the current index, as in the futures index, which is 1,600 for just an example. So you will get a contract value of 80,000. So leverage for FKI is slightly higher, about 20 plus times. Okay. Okay, next you want to know what is the tick size. So what tick size means is the minimum price change. So so for FCPO, the tick size will be 1 point. So let's say you enter a position at 2,700. So the next price change will be 2,701. That's 1 point, 1 tick. Okay, so by going up 1 tick, how much can you earn? Or going down by 1 tick, how much can you lose? So the answer is 25 ringgit. So 1 point is 25 ringgit for FCPO. For FKLI, the tick size is slightly different compared to FCPO. FKLI 1 tick is 0.5 point. Okay, so let's say you enter a position at 1,600. So the next tick will be 1,000. Let's say you go up. The next tick will be 1,600.5. And from there, you can you enter long. If you enter long position, you are able to earn a 25 ringgit. Okay. Similarly, if you go down by 0.5 point, you will lose 25 ringgit. That's one tick. So then we have the price limit. Okay, for most of you that trade stocks or wherever futures, wherever contracts or any asset that trade on the exchange, there always a price limit. Okay, so what is the price limit? Price limit is the maximum amount of price fluctuation in a particular day. Okay, this is to prevent or sudden price drop or sudden price rise which create huge lots for the trader. Okay, so in this case, FCPO is plus minus 10% of YDSP. YDSP means yesterday's daily settlement price. So for futures contract, your contract actually sort of like is settled daily, where at the end of the day, after market close, the exchange will release a settlement price, which allows you to calculate the variable floating profit and loss that you have for that particular day. So the next day, FCPO can be traded at plus, above, or below 10% of the yesterday daily settlement price. As for FKLI, it's plus minus 20%, above 20%, below 20% of the yesterday's daily settlement price, except for the spot month. Spot month, there's no price limit because spot month traces the the cash market, which is the KLCI index. So in this case, there's no price limit on the spot month. Only for futures month. For example, example of futures month would be something like, example for futures, forward month for FKI will be something like, currently it's August, right? So the next month will be September, and the next month will be December. It's in quarterly. Okay, another mechanism of futures trading will be mark to market. So just now I explained to you the concept, the mechanism of settlement price. So this settlement price actually is a mark to market concept where this yesterday's daily settlement price will be used to calculate the trader's equity, which used by brokers to calculate the margin call. Okay, so in the next slide, I'll show you when and how you will trigger a margin call. So margin call happens when your balance is below the required margin. Okay, in this case, as I mentioned earlier in my previous slide, margin for FCPO and FKI is 4,500 for FCPO, 4,200 for FKI. So when your balance, as and when you're holding a overnight position, if your balance drop below these two numbers, then you have a margin call the next day. Then your broker will chase you to top up to fund in your account. Okay, I'll show you an example on FCPO overnight position. One thing to note that margin call only will be triggered on overnight position. Any intraday position, there's no margin call. Okay, the first example will be on long position. So assuming you enter FCPO at 2,200 with a starting balance of 4,500. Okay, just assuming this investor is crazy, he fully invests his money in his capital in FCPO, which is just 4,500. Okay, at the end of the day, market closed at 2,190. Okay, so this investor has lost 10 points. So how much margin call at the end of the day will be 25 times 10 points, 25 ringgit per tick, times 10 points, you will get 250 floating loss. So your ending balance will be 4,250 at the end of the day. So you have margin call of 250. Okay. Then next, I'll show you an example on short position. Same example as well. The investor enter at 2,200. In this case, it's a short position. Starting balance is also 4,500. And at the end of the day, market closed at 2,210. So we have a floating loss of 250 ringgit, floating loss. Ending balance 4,250. So we 4,500 minus 4,250, we have a margin call of 250. Okay, next, I'll show you how to calculate the profit and loss. So we'll use an example for long one FCPO contract. Okay, assuming this, you enter at 2,700, you exit at 27,000, sorry, 2,705. So the price difference is 5 ticks, which is 5 points. Then value per tick is 25 ringgit. So how you calculate your profit and loss? You basically times 25 ringgit with 5 ticks, you get 125 ringgit. So by moving 5 ticks, you are able to generate a profit of 125 ringgit. But no worries, this kind of calculation is usually calculated on the platform. You might need to do your calculation only as and when you want to gauge the risk and reward ratio. Okay, so this is a summary of the futures trading mechanism that I introduced to you earlier. So let's just do a quick recap here. So for FCPO, FCPO and FKI, the contract size for FCPO will be 25 tan. For FKI is 50 ringgit. The margin for FCPO is 4,500. FKI is 4,200. Then the tick size for FCPO is 25 ringgit. FKI is 0.5 point at 25 ringgit. Then the price limit will be plus minus 10% for FCPO and plus minus 20% for FKLI, except for the spot month. Okay, so now we'll move on to a more interesting part of the presentation and this sharing. So I'll walk you through a bit of fundamental analysis. So before you start trading in any asset or whatever investment you're doing, you need to know what are the reasons that causes the price to move up or cause the price to move down. Okay, this is a simple definition of fundamental analysis in futures trading. So it mainly uses the micro and macro economy data to provide an opinion whether the price will go up or down. So the main use of fundamental analysis will be to predict the supply and demand level of the futures trading. Because futures trading is mainly derivatives on the underlying asset. So we are a trader or investor job will be to forecast the supply and demand of the underlying asset, whether it will go up in the future or will go down in the future. So as you can see on the screen here, there's a few factors. These are general factors. So you will need to consider the unique factors for the underlying asset. Then for how it interacts with other markets, how the factors affect on a broad economic basis, and what are the natural cycles of the underlying asset. Then also you need to look at spot and futures pricing of the underlying asset. Okay, now we move on to the fundamentals of agricultural futures. Okay, as you can see here, there's a lot of factor here. So if you wish to learn more, you actually can scan here. So scan the QR code here, so we can you can arrange an appointment with us. So we'll arrange an appointment so we can guide you through more on the agricultural futures or wherever on futures trading. I'll cover, due to time constraint, I'll only cover a few factors here. Okay, the main one that you need to concentrate on when trading agricultural futures is mainly the supply cycles. So at different point of the month, you have a different production level. Okay, so for example, FCPO, okay, the supply cycle varies throughout the year, and also the demand for FCPO will be slightly higher during festive season. Okay, So you might want to pay attention to the supply cycle of FCPO. The next thing you need to know is weather. Okay, so for agriculture futures is mainly crops, plantation. So weather is quite important. You might need to pay attention to whether it's a rainy season or it's a dry season. Okay, next will be reports to watch. So for reports to watch is mainly on the official stock inventory report released by certain governing body of the underlying asset. For FCPO is mainly NPOB, Malaysia Palm Oil Council. They will release at every month. They will release the report on the stock balance, which we call it inventory of the crude palm oil. So how much was the ending stock? Then I'll just briefly go through other factors as well. You also need to do a comparison on the previous seasons. Previous seasons means how is the performance last year. Then government subsidies, mainly on government policies. What are the government policies that affect the underlying asset? In this case, crude palm oil. Then commodity uses. How is the commodity future commodity uses affecting? Okay, one of the example for crude palm oil will be recently there's a hype on crude palm oil being used for biodiesel. So with a new usage, you might expect the demand for a certain commodity to increase. And lastly, substitute and price ratio. So you would like to know, you also want to know that how is the substitute performing with regards to the underlying asset. So what's the price ratio? Is the substitute price very going up or going down? It might have an effect on the underlying asset that you're trading. Okay, this is an excerpt from our report, our daily commentaries. Okay, Phillip Futures actually provide you data on the FCPO. You can see on the screen here, Malaysia Palm Oil Board data. Okay, so it's, in short, it's called MBOB. So you can what you need to be aware of is the opening is the end stock. Okay, when end stock reduces, it means that there could be a high demand and low supply. So in this case, when end stock reduces, we are expecting the price to go up. Okay, because your supply is lower, your demand is higher. This is one of the reasons. And also you need to pay attention to export performance. So export performance is mainly on demand factor. Okay, so you want to know whether the crude palm oil demand is increasing or reducing. So when there's a high demand, okay, then automatically you will expect the price to increase. And when there's low demand, you are expecting the price to reduce. Okay. Make sure you when you're trading FCPO, make sure you are aware of you know how to use this data efficiently. Okay, this is a graph showing the CPO stock level over a certain period. I think a period of 10 years here. Okay, as you can see here, it's down. CPO stock level actually is on a decline here. So when stock level decline, you know what to expect on the prices, right? As I mentioned earlier. Okay, next. Just now we are covering agricultural futures. So now we'll move on to index futures. Index futures is slightly easier, slightly less factors. Okay, there are three factors here that you need to consider. First is the economic factors. So you want to look at economic indicators such as GDP, CPI, PPI of the particular economy. So in this case, Malaysia, for example, CPI. Okay, if CPI is increasing, we're expecting a lot of demand for the economy. So we're expecting a positive uptrend in index futures. Then you also want to know the stock price, okay? Because index are made up of component stocks. So one way to know whether the index will go up or go down is by gauging the valuation of the underlying component stocks. So when most of the component stock is overvalued, you can be expecting the index futures to go down in the future because it's overvalued. It can't go up further. When it's undervalued, okay, of course you will do the opposite, which is you expect the price to go up in the future. Okay. Next is one factor, multiple outcomes. Okay, so this is mainly on government policies where one of the factor will have a different impact on different industry. So in this case, if one factor affect this industry, it might be good for one industry, but might be bad for industry. So it's up to you to make an analysis how the factor will affect different industry and make an investment decision. Okay. Now I'll share to you what are the constituents of the FKLI index, which is quite important for a new trader or seasoned trader to trade FKLI, because you want to know how what is the component stock that sums the FKLI index. So as you can see on the screen here, these are the top 10 constituents of KLCI index. Just a note here that this actually obtained from FTSE Russell. FTSE Russell is actually the body that that revise or control the constituents. So this actually was extracted on their semi-annual review. In June this year. So this as of June. So because you can clearly see here, most of the glove counter actually have a high weightage currently. So because now the top one will be public bank as of June. At the time June will be public bank, then is Maybank, then the third one will be Tenaga. Okay. Next, you also want to see what is the weightage of each sector in the KLCI index. Okay. The largest sectors is actually bank. That's why whenever bank is going up on an uptrend, most of the banks out there are going uptrend, you will expect KLCI to move in tandem as well. Okay, but bear in note that I'm not sure how the healthcare weightage now, because previously it was 17% in June. It might be actually almost similar to the weightage of banks now. Okay. Well, we'll have to do a calculation then. But just bear in mind, since the two largest sector will be healthcare and banks, so you might, before you do any investment or trading on futures, FKLI, you want to know the performance of the how's the healthcare sector is doing and how the bank sector is doing. So yeah. Then the third largest will be food and beverage sector, where there's a five counters and about 13.11% here. Okay, so that sums up the fundamental analysis part of the futures trading. Now we'll move on to some basic technical analysis, which is quite vital, where before you start trading, you need to know how to read a chart. Okay, so technical analysis is basically using statistical, historical and data to identify patterns. So if you are trading purely on technical analysis or investing purely on technical analysis, so you want to understand how each technical indicator works. Okay, so in this technical analysis section, we'll cover three subtopics, which is how to identify the trend, what is support, resistance, and what is the common indicators for technical analysis. So a trend is a general direction in which security or market is headed. So an uptrend is defined as higher highs and higher lows, and a downtrend is defined as lower lows and lower highs. So in the next slide, I'll show you how is the trend looks like. Okay, so this is the first example will be on downtrend. So you will see, you can see I've drawn a trend line here for you to ease your visual. Okay, you can see along the trend line, there actually the points that touching the trend line, which is lower highs. Okay, then we have uptrend. Okay, I've also draw a trend line here where you can see there's lower highs and higher highs and higher lows. You can see that the higher lows actually touching the trend line. So that's how you can identify a trend, by drawing a trend line and connecting all the lower lows or lower highs. Okay, the third trend will be a horizontal trend. We call it sideways for short. So sideways are actually highs. A period of the market where there's same high and same lows. So technically, price is not moving anywhere. It's not going higher high. It's not going lower low. So it's just going sideways. So as you can see on the screen here, these are the boxes denotes the portion of the market where there's sideways market trend. So during this kind of market, you are actually you will want to avoid aggressive long or aggressive short on the market. It will be better to trade sell on highs and buy on lows. This buy low, sell high strategy will be good during this portion of the market. Okay, next is how to identify support resistance. Okay, support resistance is defined as resistance level is defined as a level where price cannot go higher, and support will be defined as a level where price cannot go lower. So I can see on the screen here, I've highlighted the support and resistance level. Okay, one of the main criteria of support resistance level is you have to make sure there's two same reference point. The circle is known as a reference point. So when there's two similar reference points, you can conclude that the price cannot break higher. Okay, then that will be the resistance. And similar for support, there's two reference points where the price cannot break below that two reference point. Then we can conclude that that is a support. So during support, we want to buy at the support and we sell at the resistance. That's one of the common basic trading strategies. And also to take note that round numbers are usually an area of strong support resistance where it's quite hard to break through. Okay, so that sums up my sharing for futures trading today. So just a summary on what have you learned today? You have learned the definition of futures contract. Okay, what is futures contract? So who are the market participants of futures contract? Then you have learned why should you trade futures? Some of the basic mechanisms of futures trading. Then a bit of fundamental analysis and technical analysis. I think the slide is this is the common indicator for technical analysis, which I want to talk earlier. I think the slide is jump up, so no worries. I'll just go through quickly on this. So some of the common indicators will be MACD. Okay, MACD is a short form for moving average convergence divergence. Okay, so basically when MACD cross up or cross down, it will produce you a buy and sell signal. Cross up is a buy signal, cross down is a sell signal. As for RSI stands for Relative Strength Index. It's used to gauge whether the market is overbought or oversold. Then stochastic works similarly as RSI as well to gauge the market whether it's overbought or oversold. Then we have moving averages. Moving averages will be the median of all prices, the averages of all prices. So because it's based on a theory that price will revert to mean. So some traders will prefer to use moving averages. So if you wish to learn more how to use this technical analysis in that. I mean, these indicators, technical indicators in that, you can actually do and you can arrange for a coaching session with our company, with our representative that will guide you on how to get started on using this indicator for futures trading. Okay, so just to come back to this slide, I'll cover, these are some of the parts that I've covered more or covers mostly. Okay, so that sums up my presentation for today. So what should you do next? Of course, if you feel you are ready for futures trading, I'm not sure I'm not sure whether after this presentation you are convinced on futures trading, but if you have already previously interested to open a futures trading account or have some futures trading experience, you actually can go on to scan this barcode here for our online trading, online account opening. Okay, so just for information, Phillip Futures is actually the first in Malaysia to have an online account opening. Okay, so just scan this if you wish to open a futures trading account. I'll just leave it here for a moment. Okay, so how you can contact us? I've shown this in my earlier slides, so you can contact us through Facebook, LinkedIn, YouTube, and through Telegram as well. Just search for Phillip Futures Sdn Bhd. Okay, this is our address. Okay, now is the Q&A session.
Okay, thank you, Tran, for the enlightening session. Okay, a reminder for y'all to scan for our Invest Weekly. So it's Q&A time, right? Let's see the questions. From Mr. Ahwat Lim, what is the support of FCPO on your view? I saw it on a downtrend on hourly chart.
Okay, what is the support on FCPO? We'll have to go back to the slides that just a minute, that are here. But actually, currently FCPO is actually on a sideways. If you notice, those of you who are trading FCPO, it's actually on a sideways. So I would, because price has been going up for a few months, I would be interested more on the resistance rather than the support in this case. So okay, this is one of the FCPO chart. This was taken this week actually. Sorry, last week. So as you can see, this week actually the price actually go back down to 2730 like that, 2730. So we actually have a double top there. Okay, so the double top and price is not creating a higher high, so you can expect in the short to mid term it should be a sideways. Okay, but I can't really show you the what we call that, the current price there, because I don't have the chart with me now. So I'll just, for this question, I'll focus on the trend. So currently FCPO is more, based on my personal opinion, okay, is sideways at the moment. Okay, next question.
Next question. How many days or hours we have to cover margin shortfall position?
How many days? Okay, this will depend on your broker actually. Some broker give T+1, some broker give T+2, some broker give T+3. So it depends on your broker. But one thing to note that after market closes on 5:15 p.m. and 6 p.m. Okay, the exchange will calculate the end of day settlement price. Then the next day your broker will inform you. Usually you have to settle after T+1.
Okay, next question from Alfred Pang. how many cut loss points for FKLI and FCPO for intraday trading is most appropriate?
How many cut loss point? Actually, you have in one cut loss point. You enter a long position. If you enter one long position, you have one cut loss point. Similar for short position, but I think you are referring to how many ticks or how many pips of cut loss point, right, Alfred? If you are referring to the how many ticks or how many points for cut loss point, then it depends on your trading style. Depends on what time frame you're trading. Okay, for example, you are trading on a 15-minute time frame. You wouldn't want your stop loss to be too huge because the fluctuation will not be as high as a higher time frame like 1 hour or daily time frame. But best if you put your cut loss point on the previous low, or you can use something like a moving average indicator or average true range to put your cut loss point. These are some of the examples that some of our clients do.
Okay, hope that answered your question, Alfred. So next is Raymond Tan. Where do you find the inventory balance of CPO?
Raymond, inventory. I think he's referring to inventory.
Yeah, inventory.
Okay, so actually you can find on our daily research, daily commentary report, which is sent to our email of our client. Because I already highlighted previously, these are the extracts. The one that I showed you earlier is here extract from our report. Or alternatively, you can follow us on Telegram, because on Telegram, as and when the MBOB announce a result on the bad opening stocks or closing stocks, ending stocks, then we will update on Telegram as well. So you just search Phillip Futures on Telegram, you're able to find it there. It's me, I'm trying to go back to the extract where I've showed the chart. Just a minute. Yeah, okay. Yeah, this is on our daily commentary for Raymond. So you don't have to have all the, you don't have, we just cut you the hassles of finding all this data. We already provide you.
Okay, so from one more question from Lisa. Which is the best time frame to monitor on long-term trade?
What is the best time frame? Okay, the best time frame actually is also quite depends on your trading style actually. If you usually a higher time frame will be used for trend, to gauge the trend, because these trends are more long term, so it will give you better entry points at the lows. But you say if you want to monitor a trade, it's better also depending on your style, whether you are a long-term trader or short-term trader. If you are a long-term trader, best is using a daily chart. If you are a short-term trader, will be anything lower than 15 minutes. Will give you more candles, because if you are using higher time frame, it will be less candle in a week, whereas a lower time frame, you have more candles for more information to make more candles, more information to make an investment decision.
Okay, we'll take another 2 more questions and we'll call it a day then, right? So Raymond Tan, there's another question from Raymond Tan. What is the difference between MPOB and MPOC?
MPOB is the board that actually produce this data. MPOC is just it's a council, so it's sort of like how call it industry regulators, not regulators, like governing body of the industry, to help the business to grow. MPOC. MPOB is the board. So it's like the government board where it controls all this data, supply and demand data.
Okay, let's see, any more questions? I think that's about it. There's no more questions. So now, since we have no more questions, we will go on to the exciting part of the three prizes for Bursa Station. 3-month subscription, each worth 288 to be won, and only one winner per prize. So we are looking at 3 winners tonight. The first person who answers correctly, he or she is entitled for the prize. And that will be Trent will put up the question for tonight's prize giveaway.
Okay, just let me scroll this to the.
Okay, take your time. All right. So Trent will call out the name of the person who first answers the question.
Okay, so how it works is everyone, after I reveal the question, you just type in your answer in the chat box. Then I'll select the fastest to type in the chat box. Okay, so I'll read out the first question now. Okay, question 1, what is the latest initial margin for FCPO? Okay, you may type in your answer in the chat box now. Okay.
A lot of answers.
Yep. I think the first winner will be Kim Xing Fu with the answer of 4,500. So the next, the answer is actually 4,500. So I think our winner is Kim Xing Fu. Congratulations to you, Mr. Kim. I assume you are Mr. Kim.
Very good.
Okay. Then now I'll move on to the next question. Okay, this is a bit long. What is the tick size for FKLI and its value per tick? So you have 3 options here. You just type in A, B, or C. Okay, I see a lot of answer coming in. So I'll proceed to review the answer now. Okay, so the answer is B actually. For FKI is a tick size of 0.5 points and value per tick of 25 ringgit. Okay, let me just scroll back down to find the winner. The first who answers B is Lim Shang. Okay, congratulations to Lim Shang. Okay, so last question. Okay, everyone get ready. This will be a bit challenging. If you pay attention to my presentation earlier, you should be able to get this right. How many awards did Phillip Futures won in Bursa Excellence Awards 2019? Come on. Okay, I see answers coming in. Okay, I think it's about time to reveal it. So actually it's 3 awards. Okay, we won the Best Institutional Derivatives Trading Champion. Okay, first runner-up for Best Retail Derivatives and first runner-up for Best Retail Overall Derivatives. So the answer, the first one to type 3 will be Louis Xiao. Congratulations to you, Louis Xiao.
Wow, okay. Wow, that was exciting. 3 winners we have. And for the 3 winners, ShareInvestor will contact y'all tomorrow. All right. Now, we will be posting this video of this session on our Facebook, Investor Malaysia, so you can watch it again or share it with your friends. With that, we have come to the end of this session, and we will see you next week. We will be covering a very hot topic, making profit when trading volume is at a record high level. So remember to sign up for the event, the session on Monday, and see you next Monday. Good night.
Okay, thank you everyone. Thank you for your time. Have a good night.